Hey everyone, hope you're all doing well. So, I want to talk about something that's highly requested, which is internal structure and external structure. Now, a lot of times it's probably one of the most overcomplicated concepts there is, and I don't really even use the two terms a lot because I don't really differentiate the two a lot, but I know it's been pretty confusing for a lot of people out there trading on social media, especially because there's a lot of different concepts and a lot of noise about it. So I just want to quickly break it down and show you guys the difference between internal and external structure, how to identify what you're supposed to be trading, and then a couple of tips on what to look out for. So we all know structure as basically the basics, right? Um, when we're talking about market structure and we're talking about trends, in a bearish trend, we're talking about a series of lower lows and lower highs. Well, you can see that we're having a lower low, lower high, lower low, lower high, lower low, lower high, etc. So the expectation is to basically continue that trend. The opposite is true for bullish trends, where you have a low, a high, a higher low, a higher high, and a higher low. Now the expectation is to continue to create higher lows and higher highs. Now, within all of these trends, let's say this is, for example, the 4 hour time frame. Within all of these trends, there is always going to be smaller trends on different time frames. So on a lower time frame, let's say this is the 4 hour. On a lower time frame, let's say the 15-minute, you're going to see a lot of mini trends within that structure. Now, this is more so multiple time frame analysis, which a lot of people tend to confuse with internal and external structure. However, let's take a look at this. So the 4 hour time frame is not always going to look picture perfect like that. So we're going to see a lot of wicks everywhere. We're going to see a lot of highs and lows. And the question is, what are we supposed to trade? Which one of these highs or which one of these lows are we supposed to take a look at? So I'm going to go straight into the live charts and find a couple of examples rather than waste time on theory because we all understand theory. So one little tip that I have not seen before is there is always external structure. The more you zoom out, the more external structure you'll find, basically, right? Let's say we're all the way zoomed out as much as we can. You can say that this is your external swing low. This is your high, your external low, and then your external high. So this is very confusing because we're not going to be trading just these highs and lows, right? Because that would take ages. So one key thing that I think is really important when trying to identify the difference between internal and external structure. And by the way, I'm making this video for the members, so I'm assuming you guys already know what structure is. If you're a complete beginner watching this, then maybe try and find some market structure basics first. This is mainly for a couple of members that I'm noticing are struggling with this. But one key thing is to make sure that you're always looking at similar ranges of price action. What I mean by that is you're always sort of zoomed in or zoomed out the same way. Because what I do see happen sometimes is that people will, for example, look at price action like that one day, but then the next day they're looking at price like this. And then the day afterwards, they're looking at price like that, which makes it really hard. And then you're obviously going to confuse yourself with what is internal and what is external structure. So the key thing, in my opinion, to identifying internal and external structure is to just stay zoomed in, relatively zoomed in, the same way every single time. And make sure that, because obviously, in my opinion now, this is internal structure, right? This is your low, your high, this is your low. Everything in between that is internal structure. However, if I zoom out a lot more, that perspective changes. Now, this is your external high, and this is your external low. So it's really hard to identify what you're supposed to do when you're constantly changing up perspective. So just make sure that you're kind of zoomed in the same way constantly, and then try to identify basically what it is you're looking for. So don't, if you're, especially if you're in doubt, don't start zooming out and they'll be like, oh, well, this is my swing high and this is my swing low. But if I zoom out even more, now this is my swing low, my swing high, I don't know what to do. Make sure that you're just looking at the more recent price action. We're trading the 4 hour too. Remember that we're trading the 4 hour. So the more recent price action is what's most important to us. Look at most recent price action. Identify the highs and lows in this range. For example, low, high, lower, lower, high, lower, low. What is the expectation? The expectation is to continue that short. Now, if we are going to overanalyze it, which is something that we don't do at simple markets, we believe that we should keep it simple, right? But I will say that there's a lot of traders who will, for example, then start looking at that and be like, well, but what if we get that break and then we can start looking for longs? Sure, that might happen, but that's something that we'll look at once that happens. For now, we're just going to continue to follow order flow, basically. We're going to continue to trade that short trend, that bearish trend, and that's what we're looking for. There's no reason for us to start overanalyzing every little demand zone here. I know that I've done it in the past. There's always a million trillion reasons for something to work or not work, but our strategy, the one that we're using, just focuses on following the most recent order flow. So I guess my number one tip is just to stay a little bit more zoomed in, look at the more recent price action, and avoid over analyzing every little thing that you see to the left. Because yes, there is a fair value gap here that we could respect off of. Yes, there's a liquidity sweep here. There's so many things, so many variables. The only thing that I'll do is make it harder to make a decision, which makes it harder to consistently execute on a trading edge. What we're doing is we're following very recent order flow. So we are just going to be looking at this high, this low, and we're just trying to, sorry, excuse me, this low, this high, oh, never mind, that high. We're just trying to continue that bearish trend. So I hope that simplifies it a little bit. I know it's theoretically not the 100% correct explanation for internal and external structure, but I would suggest not to over confuse yourself with internal and external structure because it's a lot of complication and it's a lot of noise that we kind of want to get rid of. So make sure that you're always zoomed in the same way. It makes a pretty big difference if you're, for example, let's say it's Monday, we're looking at a price like that, but then it's Tuesday and we're suddenly looking at it like this. Then it's Wednesday and we're looking at it like that. Those are all three different perspectives. You got to know what you're looking for. And in our case, we're looking at most recent price action. So remember that. And hopefully that video was a little bit helpful. If you guys have any other questions, reach out to me on Discord and Sven FX. And I'll see you guys in the next video. Take care.